Welcome back to Trader UK, Adam here. Today I want to take a quick look at Sundial Growers, a stock that trades in crazy volume, 3 to 500 million daily volume at the moment, and that's actually quite low for this stock. It also caught the attention of the Wall Street Bets community recently, but I want to take a look at the basics and the fundamentals to see if this company is actually a good long-term hold or not. This is Sundial Growers, ticker symbol SNDL on this one. Canadian cannabis play. They specialize in indoor cultivation. They sell dried flower, pre-rolls, vapes and oils. The company is currently transitioning away from a wholesale model towards this own brand retail model, and that's in the hopes of achieving higher margins. These are their products here that you can see on screen. If we look at the 1 year chart, you can kind of see that it was dying a slow death here up until November. Then on the back of Biden's win, got a new lease of life. Eventually, Wall Street Bets and the Reddit community picked it up. It went parabolic, it hit $2.95 a share. And then more recently, it's pulled back to $1.13. That leaves it with a market cap of $1.77 billion on revenue of $54 million. It is worth noting that back when it hit $2.95 a share, there was a lot of short interest in this company. That doesn't seem to be the case now. It seems to have died off. So I have seen people saying they're expecting another short squeeze on this one. I don't think that's going to be the case. The good news with this one is the company recently announced that it is debt-free following a financial restructuring, they called it. That positions it very well to seize any upcoming opportunities in both the US market and at home within the Canadian market. I did take a look at these financial statements here, but the most recent set of accounts that we have are up to the end of September 2020. So a lot's changed since then, unfortunately. They've sold a lot of assets, they issued more shares, and their balance sheet is just looking a lot healthier overall. They're also transitioning away from their wholesale model and towards their retail model with their own brand. So that's going to be great for the bottom line, but not great for the revenue figure, the top line. So it's very difficult to add any useful narrative to these numbers, but we are 10 days away from them reporting earnings, and those new numbers will give us a lot more context. If you are going to listen in on the earnings report, I think it's quite unlikely that the actual earnings themselves are really going to move the stock price. Maybe if you had a massive beat or miss, either way, but I can't really see that happening. Estimates are for an average of -6 cents per share, which doesn't sound too bad, but remember this company has something like 1.5 billion shares in issue. I think it's fair to say a lot of investors are holding out hope of a merger or an acquisition or some kind of news surrounding that as part of the earnings report. And to be fair, as a company, they have hinted at that in the past, and they've positioned themselves very well. They've organised their balance sheet now as a company that could make an acquisition or even be a potential acquisition target. More than that, though, the way the industry is shaping out, that's kind of how it's playing out. We've seen it with Tilray and Afria. Everyone is kind of poising themselves ready for law changes, and they're taking the approach that in North America and in Europe, the bigger you are, the better. The more clout that you have, the more likely you are to be able to seize opportunities when they do arise. Okay, a few things that I like about this company. Number one, the North American cannabis market, that's a great place to be right now. So there's no doubt that in the future there's going to be a lot of opportunities to scale this business up. How quickly those opportunities emerge, I don't know. They tend to center around US and federal law changes, so it doesn't really take much to throw a spanner in the works, but the change that they need is definitely coming. We also have Mexico as well, who are even closer to announcing law change to legalize cannabis, which could come as early as next week. That's supposedly tipped by former Mexican president, so it's a pretty good source. Number two, they've actually positioned themselves really well now to seize the opportunities as they come up, as the changes take place. The recent restructuring leaves them with a healthy cash balance to consider acquisitions, to look at expansion, or maybe just to bide their time and see what comes up. Now it's just a case of how effectively they use that cash. And then finally, I also like this move towards their own branded products. Again, I've got them up on screen for you here. Of course, the top line isn't going to look good for a while, but it should mean better margins. Now, what about the negatives with this one? First of all, this company has a history of diluting shares. I know I said that the restructuring left them in a good position with cash in the bank. And if it was a one-off, then I would say it's good planning. You raise capital whilst the share price is high, but it wasn't a one-off. Look at the history of the company. It used to trade at $13 a share, but after years of equity raises, the stock struggles now to keep its head above the $1 mark. Based on the fact that they still rack up heavy losses as well, I cannot see anything that suggests that this will be the last time they do that. Number two, the valuation, $1.7, $1.8 billion. That's rich for me. I know it's difficult to value these companies because of the potential that lies ahead, but 1.7, 1.8 billion on 54 million of revenue, that's 31 times revenue. There is a good chance that the revenue figure is actually going to fall in the short term as well as they switch across their model to own brand away from the wholesale model, and that's going to stretch that valuation even further. To give you an idea about how that relates to the competition, Tilray currently trades at 17 times revenue, Aura is 6 times revenue, and Canopy Growth is 29 times revenue. So really, it's right up there at the higher end. Of course, revenue shouldn't be the only measure that we use to compare these companies, but seeing as they're all loss-making at the moment, seeing as it's all about which company can capitalize the most and seize the most of an emerging market, it's a pretty good measure to use. So overall, I think if you're looking at Sundial Growers as a long-term hold, I can't see much in it between them and their competition. Sure, the valuation is a little bit stretched, but it is for the entire sector, and it is for a reason as well. The advantage that Sundial now have is being debt-free. That positions them very, very well. The way that they constantly dilute, that is a little bit off-putting, I must admit. But again, everything in this sector runs at a big loss. So when you're burning through cash, really you've only got two options. You either raise equity or you take on more debt. Neither of those are going to be particularly good for shareholders. So providing the equity is raised at the right time, at the right price, it shouldn't be considered too negative. So long term, I don't really see any huge advantage that sets this company apart. For sure, it's a great space to be in, but if we're just trying to get exposure to the space, I would probably recommend a small position and then hedge by taking positions in all the other key players as well. I don't think we have a clear enough idea yet of how this market and the companies that operate in it is going to evolve and take shape. So it's just a case of hedging your bets, really. Having said that, in the short term, if you're looking for a company to trade, we've got an earnings report on the 17th of March. We've got strong potential for potential merger or acquisition. We've got the US federal law changes coming up at some point, but the Mexican law changes, they could be announced as early as this week, which would be another big catalyst. So to hold in the short term, I would actually lean towards Sundial over the competition. Yes, I think that Sundial shows more potential as a short-term trade rather than a long-term hold at the moment, but we are expecting an avalanche of news over the coming weeks, so we'll have to see how that changes the dynamics. I would be really keen to hear your thoughts on this one if you are holding, and what other cannabis plays you would recommend to me. That's everything for today, guys. Thank you very much for watching. I'll see you next time.